evening. Welcome to the final episode, episode number 25, the final episode of the DIY bookkeeping series. I hope you have enjoyed it so far. I am going to ask everybody to please enable StreamYard. Please go to the three dots on the bottom right-hand corner of your video and tell it to enable StreamYard because enabling StreamYard enables me to see who is commenting. Otherwise, it comes up as anonymous. So I always give everybody the spiel on why I do this, first and foremost. And firstly, sorry, picking out a dog hair from my mouth. Firstly, it's because of the small business owners. The small business owners who have been affected by COVID for the last almost year may not be able to afford a bookkeeper or a CPA for that matter. And I'm here to help them. I'm here to give them the most basic of what they need to know in order to do their books. And it is not, just because you can't afford a bookkeeper is not an excuse for you to be going by your bank account balance, because I guarantee you that if that is what you are doing, you will have a very bad experience and you will never want to do that again. So I guarantee it. The second reason is for all of the brand new and new-ish bookkeepers out there. Due to COVID, COVID has birthed, oh my goodness, it must be 100,000 or more brand new bookkeepers just in the first 9 months. And unfortunately, with many of these online programs that was promising the world, uh, they did not deliver. And so all of these new bookkeepers, um, they were failed. They were failed by all of these people that were just trying to make money. And so I'm here trying to help them gain their confidence, help them to develop their knowledge as well as their skills. And so these videos are a help to them as well. Now, I have asked everyone to please come on to this video, watch till the very end, and participate. You must participate. That is the number one rule. But you also must stay until the end of the video, because at the end of the video, I'm going to be doing a drawing and I will tell you at the end of the video what that drawing will be for. It is a surprise. So we always do a review of the previous lesson, and last night's lesson was on month-end close. So let me share my screen here. Okay, so what is month end? And just very briefly, because I want to make sure that we've got time for anybody that gives some comments, if I can get people to watch the video tonight. And I would like there to be some, a winner. So what is month end? Month end is the closing of all your processes, which usually occurs on the last day of a calendar month. This does not matter if you are in a fiscal year or a calendar year. A fiscal year it can start and end at any time of the year as long as it's 12 months. So some organizations will actually start their company in July and choose to do a fiscal year. So their fiscal year is from July to June. Most companies and organizations will have it as a calendar year, January through December. I see that somebody is watching here. Please enable StreamYard. Go to the three dots on the bottom right-hand corner of your video and enable StreamYard so I can see who is commenting. I am asking anyone that joins us today to participate, because at the end, the person that participates or the people, uh, they will be up for a drawing. Um, okay, so the month being closed will remain open for up to 7 additional business days in the next preceding month in order to process all prior month transactions. What does that mean? It means that you cannot get your financials in 1 to 2 business days. It is impossible. You cannot get financials for, at the very least, 5 business days, at the very least, because there's so much work that needs to be done. Um, Come on, there we go. Why is it an important process? It's important to perform month-end closing in every organization, as this enables the bookkeeper or accountant to generate accurate and consistent financial statements. It also helps in early identification of any accounting and bank-related issues rather than at year end. And what is the process? It can be very lengthy. This is a general process, and it may not be your process. Your process might have 24 different things attached to it. So, different tasks. Again, this is just for general purposes. The very first step to the month end close process is that you continue to collect all data. You enter all remaining transactions for the current month. You are now going to ignore the next month. That month, as of this moment, does not count. It does not exist. You are concentrating on the current month only. Ensure all payroll has been processed and current. Make sure all loans are up to date and interest is allocated. You reconcile all bank, loan, and credit card accounts. Update all prepaid expenses and depreciation. Review financial reports for accuracy and consistency, and make any adjustments and corrections to financials. Now, when it comes to prepaid and expenses and depreciation, especially depreciation, I highly recommend that you do not do that yourself, that you find a bookkeeper, you find a CPA, someone that can do that for you that knows what they're doing. Let me change my banner here so that people still know to enable StreamYard. Again, anybody watching, if you stay till the end of this video and you participate with comments by answering questions, you will be in the drawing for a prize. Okay, and quickly, why should this be a part of your process? Your vendors want to be paid before the end of the month, just as you do. Everybody is in the same boat. In order to get accurate financials, everything must be entered for the entire month. You need to ensure that everything in your financials are correct each month. You don't want to wait until the end of the year to enter everything all at once, because I guarantee you there is not enough time in your month or 2 months or 3 months to enter this. And I'll tell you now that anybody that you bring this to, a giant box full of receipts and statements, they will hate you and they will charge you a lot of money to do it. And lastly, this is the best way to help you stay on budget. Okay, so to the meat and potatoes, where did my slideshow go? There we go. Okay, the meat and potatoes, reconciliations and reconciliation discrepancies. I see a couple of people watching. Please enable StreamYard by clicking on the 3 buttons. If you participate and give any answers to questions, you post comments and you stay till the end, you will be in for a running for a special prize that I will tell you about at the end of the lesson. Okay, so what is the difference between a bank reconciliation statement and a bank reconciliation? A bank reconciliation statement is a summary of banking and business activity that reconciles an entity's bank account with its financial records, also known as a bank statement. This statement outlines the deposits, withdrawals, and other activities affecting a bank, credit card, or loan account for a specific period. A reconciliation, a bank reconciliation, is the process of matching the balances in an entity's accounting records for a cash account or accrual, it really doesn't matter, to the corresponding information on a bank, credit card, or loan statement. And when I say a cash account, it doesn't necessarily mean cash or accrual basis. It means, it is your bank record. It's everything that's going in and coming out. Okay, well, since I do not have anybody watching so far, I don't have a drawing. So, we will swing back to this. What is the importance of a bank reconciliation? They are an essential internal control tool that's necessary in preventing and detecting fraud. So I am actually going to ask, okay, come on now. I am going to ask for some participation. Uh, Please enable StreamYard so I can see who's commenting. Um, Why do you think bank reconciliations are or are not an important part of your bookkeeping? And that person is gone. So we're not even going to worry about it. Okay. So they also help identify accounting and bank records, or sorry, bank errors by providing explanations of the differences between the accounting records cash balances and the bank balance position for the bank, credit card, or loan statement. How do you reconcile a bank statement? To reconcile a bank statement, the account balance as reported by the bank is compared to the general ledger of a business. A general ledger is that's all of your bookkeeping. That is essentially a record that has all the ins and outs of the money that has passed through. The bank keeps an account for every customer where the deposits are recorded on the credit side while the withdrawals are recorded on the debit side. The bank sends the account statement to its customers every month or at regular intervals, as most of you, I'm sure, know. I am so sorry. Sometimes these balances don't match. The business needs to identify the reasons for the discrepancy and reconcile the differences. This is done to confirm every item is accounted for and the ending balances match. To do this, a bank reconciliation is prepared. Just one second. Sorry about that, guys. The dogs heard a car door. And with me being the only one here right now, of course, they're going to start barking. Oh, how wonderful, how wonderful, how wonderful it is having dogs. Okay, here is a step-by-step guide on a bank reconciliation. And before we actually do this, I am going to stop sharing my screen and I am going to go into QuickBooks so that you can actually see a bank reconciliation and what it looks like. Okay, so we are in the sample company. What we're going to do is we're going to go to accounting and we're going to go to reconcile. And what that's going to do is, oh, you've got to love these pop-up messages. It's going to ask you for the account. It's going to give you a beginning balance based off of what it is seeing when it was last reconciled. If it was never reconciled, it's going to give you a $0 balance. Beginning balance, that is. It's going to ask you for the ending balance and the ending date. The ending balance is going to be your ending balance from the bank statement. So for this purpose, we're actually going to put 7,500 and the ending date as shown on your bank statement, we're going to say is 131. reconciling, this is your bank reconciliation. It brings it brings up a list of every single thing that has come in and gone out of your account. So essentially, let me go on ahead and share my other screen again. What's going to happen is, again, you enter the ending balance from the bank statement and the statement date. Now, it's a little bit different depending on which software you're using. If you're using QuickBooks Online, as you can see, it will take you directly to the reconciliation process and you can begin with the next step. If you're using QuickBooks Desktop, however, you need to click on the little box on the top right-hand corner that's labeled Hide Transactions after the statement's end date. And the reason why is because if you don't click on that, it's going to bring up every single transaction that has been brought over or that you have entered after that statement date, and it's going to throw everything off. Step 2 is you look for the following sections to examine, which are cleared checks and payments, cleared deposits and other credits, and then, of course, there's the uncleared checks and payments and uncleared deposits and other credits. You begin checking the boxes of each cleared check, payment, and deposit. After everything is checked and it matches the statement, you should balance to zero and you have a perfect reconciliation. And let me show you what I mean when I say balancing to zero. This amount right here that says difference. If you have matched everything exactly to the T, like what the statement says, this will give you a $0 difference, and that's what you want to see. If you had already checked all of these off, let's see what happens. There you go. You've checked everything, and now you have a difference of $6,299. You don't want that. That means it's a bad thing. So what do you have to do next if you have a difference? If you don't match to zero, it means that there's an error somewhere in your books. Under no circumstances, none, should you ever reconcile any account that doesn't give you a $0 balance or a $0 difference. So your next step is to start from the beginning. You don't have to input your your ending balance and your ending statement date again. You don't have to do that. I do recommend that you review it and make sure that you put it in correctly before you uncheck anything. If that amount remains the same and it still matches your bank statement, then you click on that little dot that I clicked on, so it would select all. It'll probably end up asking you, do you want to select all? Say yes, but then click it again so it unchecks every single item. Make sure you pay close attention to each dollar amount that you're looking for. It could be that you're off only by a penny or you've transposed some numbers somewhere. Once you have redone the reconciliation process, go back and look for any remaining unchecked transactions. Look at each remaining unchecked transaction. Do they look like a duplicate with a duplicate date? Or have different amounts entered? Perhaps you thought a transaction you checked matched one of that's on the statement, but you don't actually have that transaction entered. So you may have every single transaction in your reconciliation checked off, but you've highlighted something on your bank statement that says, wait a minute, I didn't find this one. It means you didn't enter it or it didn't come through in your bank feed. And so whenever you find those, you have to enter them, but you have to remember what it was. If it was a debit card, chances are you'll know exactly what it is. If it was a check, hopefully the bank statement has all of the checks attached. If you are doing this via the bank website, then hopefully you'll be able to drill down to that transaction and actually look at the check in order to enter it. Um, those are the reasons why you're not balancing out to zero. This is the reason why you have a difference. Either numbers were transposed, you were off by a little bit, face it, our fingers, they hit the wrong keys sometimes, or something got entered twice or didn't get entered at all. So those are the reasons. Once you do your corrections, once you have found any items that you have seen as a duplicate, you've gotten rid of it. Once you've seen items that have the wrong amount and you've changed it, or once you have entered the actual transaction that you're missing, then you check that item and you should balance to zero. And just like that, you did your first bank reconciliation and it's correct. So, um, I would say that we were going to have a prize drawing for participation, but we've had a few stragglers come in that checked it out for a little bit and then they left, and not a single soul participated. So, there's not going to be a drawing. Otherwise, we would be doing a drawing for a $50 Amazon gift card, but that's not going to happen. So now I get to use it. That $50 Amazon gift card will remain in my bank account. So, um, so congratulations for making it through this DIY bookkeeping series. If you ever struggle with your books after watching my videos, please feel free to get in contact with me. I can help. I can and will help you in any way that I can. This is my information. Please write it down. Um, please give me a call. Please send me an email. Check out my website, whatever it is that you feel more comfortable with. And just get in contact with me and start asking me those questions. Just let me know, hey, I watched your videos and I have a question about this. I'm trying to do this, but I just can't quite figure it out. Could you help me through it? Um, normally I have a mentorship program for my bookkeepers. That is a charge per hour sort of thing. But if you are a small business owner and you just have a you've got a couple of questions about a video that you are trying to do, and it's something that I can help you with quickly and seamlessly, um, then please just tell me, hey, I saw your video, and I will help you for free. If it is something that is going to require a lot of work, um, hours, and some research, then we can talk about it and I can lower my rates just for you. So, um, again, Lisa Culverwell, I'm with Miss Elsie's Bookkeeping LLC in Crowley, Texas. And please feel free to reach out to me. I am really sorry that we couldn't have a drawing, but to have a drawing, you must have people. And without people, it's impossible. So um, I'm sure I will be doing more videos uh, in the near future. What they will be about right now, I don't know. So I hope to see you soon in the near future, and I hope to actually have some participants. So thank you very much. I pray all of you have a wonderful week and weekend. God bless.